Paul, give us the kind of symmetry around this number. The survey's in the kind of 160, the whisper number's in the 180. Bloomberg Economics has got it way higher than that. If you get an upside surprise, how do markets react?
Yeah, good morning, Guy. I think if you get an upside surprise, markets would be pretty upset because, as we've already seen this year, the market is worried about the Fed keeping interest rates higher now for longer, ceasing those cuts, maybe even needing to raise interest rates again towards the second half of the year if inflation isn't brought under control and if the labour market continues to perform strongly along with the rest of the US economy. So the consensus number among analysts, 165, but with that whisper number 20K higher there or thereabouts, it sort of says to me, you know, if we get a number that's in line with consensus, and the market will take that as a relative relief that it's not stronger, that it doesn't cause more volatility in the bond market, and therefore we may get a bond rally, a little bit of a weaker dollar, and that could take some of the recent pressure we've seen out of markets. If we get that 185 number or even higher, then potentially we see another sell-off, we see another lurch in yields towards that 5% number we've been getting closer to recently. It raises more concerns that the US economy, the super strength of the US economy just keeps on going. That lifts up the dollar and puts a lot of pressure again on global markets all around the rest of the world.
Paul, if we get to 5% on the U.S. 10-year, does that incentivize buying? Are there certain levels now on the way to 10% to 5% that, again, just basically bring in flows into the bond market?
I think that that's a really key thing. Some of the investors that we've been speaking to this week, Kriti, have been talking about 5% looking very attractive. And we've obviously seen a lot more demand in the corporate space for those higher yields that you can get on those bonds. I think part of that is the idea that actually corporates have such strong balance sheets at the moment. They're relatively attractive compared with governments because of the welter of supply that we're getting through on the government side and those inflation risks as well. You know, we've seen it particularly in the gilt market, but also we're seeing it even in something as safe as the US Treasury market.
And Paul, China seems to have all the opposite problems to everywhere else. The PBOC halting bond buying to defend the yuan as the gloom worsens. Does it matter?
Yeah, Lizzy, absolutely true. So China is in that kind of disinflationary spiral we've been talking about this week, a real funk, and bond yields just continue to press lower as a result. People cramping in there because they don't think that inflation is going to roar back in China anytime soon. They think that the PBOC is going to have to continue to cut interest rates, and they think that therefore bonds are a better store of value than trying to think about putting your money in equities, for example, or in property or something like that. Therefore, the PBOC didn't really need to be buying bonds in the first place. It hasn't been adding a significant amount in any case, and so their lack of buying now really isn't going to make a great difference.